Hello, everyone. Welcome back to Zip Tips Crypto, where we simplify crypto without hype and we build a long-term wealth mindset to succeed. I am Zip, and I hope you are doing great and everyone's having a fantastic time out there as we look at these markets and we look at what's going on with Bitcoin at $111,000, XRP's at 243, Cardano's up. Basically, everything's up right now. They're making moves and we're seeing inflows, especially Bitcoin is definitely leading the way. Very explosive, but today just isn't another update. It's really a wake-up call. Something major has just happened in the US bond market, and it changes where capital flows next. At the latter half of this video, we're also going to discuss some concepts required to be successful in this crypto journey to ensure that we walk away wealthy, both financially and mentally. So before we get into everything, just do me one easy favor. Smash that like button. And if you haven't subscribed yet, hopefully you find value in this content. And by the end, you will. All right. Let's get into it because I know everyone is busy and we got other things to do. So let's kick things off and let's listen to Ray Dalio and allow him to set the foundation for this conversation.
Watch the bond market. The bond market is the basis. It's the backbone of all markets. It is the risk-free, meaning default-free, probably default-free, interest rate that determines what all asset returns are going to be. And when there is a breakdown of the supply-demand picture for the bond market, you see a certain type of market action. You see long rates rising relative to short rates. You see the currency go down. You see gold go up, because there's a movement out of that bond market because there's a supply and demand imbalance. When that happens, that raises interest rates and it puts the Federal Reserve and other central banks in a bind. That supply-demand imbalance, in order to deal with that, when there's not enough demand, they're torn between allowing interest rates to rise and have the negative effect that that has on markets and the economy, or coming in and printing money, essentially, and buying bonds in order to provide the demand for those bonds that aren't there, and that produces inflationary pressures. Watch the.
And I absolutely think that they're getting ready to turn these printing presses on. And we're going to see that here in the near future as they turn on the quantitative easing again to stabilize these markets and what is going on. And we always want to pay attention to the bond market because it's kind of the driving force. So on the surface, US bond auctions generally are routine. But this week, we got a big red flag. The Treasury held a $16 billion auction for the 20-year bonds, and the demand fell flat on its face. It was very, very weak. Investors just weren't willing to buy unless they got a much better return. The yield has shot up to over 5%, well above expectations. And this move created the biggest tail since December. So bottom line, what's the translation there? Investors don't want the US debt unless they're paid a premium. So that's a huge problem. Why? Because the US is running a 7% deficit to GDP. And the Fed has yet to cut rates. But I believe that's coming as well. They're going to have to, ladies and gentlemen. And that combination is absolutely toxic for the bond market. And let's take a look at Japan. We know that Japan holds a lot of US treasuries and bonds. As we see here, Japan may be forced to sell US bonds to use the same funds in the local market. Japan holds 1.1 trillion US treasuries. If they start selling, 10-year bond may move above 5%. If other countries and investors start selling in anticipation of this, that's going to even be a bigger problem. We're caught in a catch-22. The Fed is caught in a catch-22, and that's why they're going to have to do something to move. You know, when the treasury yields rise, borrowing costs spike. The markets wobble, which we saw that yesterday in the traditional markets. And risk assets, like the traditional tech sector, generally are the ones that suffer. But here's the key point. Even traditional safe havens like the US bonds are now losing their appeal. That leaves investors asking a serious question. If they can't trust fiat and they can't hide in the bonds like they normally do, where are they going to go? This is where crypto comes in, especially deflationary assets like XRP, HBAR, XLM that have high utility, and also stores of value like Bitcoin. And that's where we're seeing the market explode right now for Bitcoin. And that's where this all comes in. So while short-term price action treats digital assets risky, its long-term fundamentals are deflationary. They're decentralized and independent of sovereign debt risks. So unlike the US dollar, XRP and the other crypto digital assets that I talk about, they can't be printed on demand. There is a fixed supply. Unlike bonds, XRP's yield isn't tied to Fed policy. And unlike stocks, utility crypto doesn't rely on corporate earnings or credit markets. In the world where the dollar is being inflated away and debt monetization, it's the only exit. XRP, XLM, HBAR becomes a vault, and it's not a gamble. And we're going to see a flight into these digital assets. So let's zoom out a little bit and talk about the bigger problem. The US has record debt. As you can see in this headline here, debt is rising by 1 trillion about every 100 days. We have a significant issue. The real yields are rising. The Fed is absolutely pushed up in a corner right now. And the traditional assets are facing some structural headwinds, meaning our traditional, the bond market and the stock market. Now, let's look ahead a little bit because we like to look at the macro view. We're not looking at it from a day-to-day perspective. Let's look at it 2 to 5 years from now, when the dollar is weaker and inflation persists in waves and fiat currencies continue to lose global trust. Well, guess what? In that environment, crypto doesn't just survive. It's going to absolutely thrive. It becomes the final exit ramp from centralized monetary failure. And then, as all of this is going on, we have stablecoin regulation that is going to pass by July, which adds more fuel to the crypto markets. And Matt Hogan, as we can see in this excerpt right here from X, who is the Bitwise CEO, states outside of the January 2024 approval of spot Bitcoin ETFs, this is the most important regulatory development in the history of crypto. It may even be bigger and extend a crypto bull run. And this is what I've been talking about in several of my videos, that the passage of the regulations on stablecoins, and as they're working on the overall crypto framework bill, it's going to solidify exponential growth like we have never seen. And that's why I'm still eyeing late Q3 and Q4 of 2025 to be an absolute rocket ship of explosion. We have not seen anything yet. And we know we have the XRP ETFs that are still pending out there, which I saw today, they were delayed again by the SEC. We have that going on. We have the ISO 220 implementation in July for Fed Now. Could they push that back again? Yes, but the deadline for the world is November of 2025. So like everything, they can only kick the rock down the road for so long. Now, what's more important when all this is going on and we're seeing everything that's happening here and we're invested in these crypto digital assets that have high utility. That's what I like. I like use case. I love use case. And that's why I'm invested in the market assets that I am, like XRP, HBAR, XDC, XLM, SHX. And we've talked about our portfolio diversification plan that I like. Okay. And we've gone over the videos of what exit strategies would look like. But tonight, we're going to go a little bit further and we're going to dig deeper because we don't want to get distracted by the noise and all the stuff that's going on out there in the world, in the markets. And we want to stay non-emotional. So how are we going to do that? Well, we're going to talk about it here in a minute. Let me turn that banner off so we have everything. So we know we're going to discuss two principles tonight that have helped me stay aligned and stay focused in these markets, not just in my investment, but in my daily lifestyle. Crypto is an absolutely wild ride, 24/7 markets, crazy price swings, and FOMO and hype everywhere. But here's the truth. Success in crypto isn't just about charts or tech. It's about your mindset. Our thoughts and our habits can make or break our investments. Psychological traps like fear, procrastination can absolutely quickly derail your life and your financial life. Today, we're focusing on two ideas that can help you avoid these traps in crypto. We're going to talk about the definiteness of purpose and hypnotic rhythm. I've employed these strategies after reading a book by Napoleon Hill, and I've noticed remarkable changes on how to attack life instead of being attacked by emotions. So let's break them down and see how they apply to our crypto portfolios. So first, a definiteness of purpose. Definition refers to the clarity and focus that individuals need to achieve their goals and create a fulfilling life. It involves having a clear, well-defined, and written, definite major purpose in life, along with a plan to achieve it. This principle emphasizes the importance of having a strong vision and a burning desire to attain that vision. You just need a clear, specific goal and a solid plan to achieve it. Because without that, we're just drifting. And in the crypto world, we be drifting from one coin to the next coin, from one hype to the next hype, whatever the latest thing is. It's like a ship without a rudder in a crypto sea. So how does this work specifically for crypto? How do we employ that? Step one, define your goal. Are you here to hodl for long-term wealth? Or are you trading altcoins for quick profits? Or support cool projects like DeFi or Web3? Just pick one clear goal. For example, my goal is to build $100,000 portfolio as an example in 5 years by investing in top tier utility cryptos like XRP, HBAR, XLM, XDC. Put a name in there. It doesn't matter what your name is. The point is have a definition, have a goal, and stick to it. 2, make a plan. Research these projects thoroughly. Evaluate their white papers, evaluate the tech, evaluate the team behind it. We know how strong Ripple is as an example for XRP, and evaluate the adoption. You know, how many users, how many wallets are being created? How many partnerships are they creating? Set rules like only investing 5% of your portfolio in high risk altcoins or meme coins, because you need to scratch that itch if you need to do that. But don't jump from one, you know, solid project into the next greatest thing. 3, stay focused. Crypto is full of noise. We have all this hype out on X. We have FUD in the news all the time. You know, a definite purpose keeps you grounded. If your goal is long term, don't panic sell when XRP dips by 10%, as an example. Or if you're into Bitcoin and the market dips, don't panic sell. Stick to your strategic plan. The mindset, you know, this mindset absolutely has assisted many other people. It's not just me with their investment goals in life. It's all about knowing what you want and going all in. Absolutely no distractions, non-emotional. Now, let's talk about how, you know, to make this stick with the next concept we're going to talk about, called hypnotic rhythm. Definition: a state of mind where individuals are drawn to repetitive or predictable behaviors, often without conscious effort or direction. Okay. So what does that mean? Negative hypnotic rhythm, as an example. Have we ever checked our crypto portfolio every 5 minutes, or panic sold when the market crashes? You know, that's a horrible habit loop to be in, but that's because we're being driven by negative emotions, and we're creating a rhythm that continues to perpetuate itself. You know, those type of cycles make us drifters, reacting to fear or hype instead of just sticking to our goals. For example, constantly chasing the next hot altcoin because of a, you know, tweet or X post that can lead us to losses. And I'm speaking from a position of authority on this because I've been there. FOMO has gotten me many times into a bad trade, and a few times when I was back when I was brand new. That's why trying to focus this content on direction and focus everybody on a long-term strategy, so you don't buy into the FOMO and you don't get wrecked like I did and have. You know, I want to keep other people from doing that. Secondly, positive hypnotic rhythm. So on the flip side of the negative, you can build habits that win. You know, set a routine to research one new coin a week, as an example, or research the coin that you're in. Make sure you're staying up to date with it. Stick with that investment plan, or only check prices once a day. I state this all the time. I do not look at the markets. I have expectations of if I decide to sell, when I will. And I put that in other video content to show you that, at that 10% laddered approach, as an example, in the last video when we talked about how I'm going to move those profits into XRP and then out of XRP into my financial system. These small repeated actions become automatic, like muscle memory for, you know, for your financial portfolio. Those of you that are into fitness, you'll understand this principle because you go to the gym and you work out your muscles and you build up stamina within your muscles, and you have that muscle memory that is built up. You know, for instance, regarding finances, you know, I started investing $100 a month into XRP, no matter what the price was. I didn't care what the price was. I just kept buying. And now it's just a habit that keeps me absolutely calm, whether the price is down or the price is up. Again, no emotion. Breaking bad cycles, you know, adversity, like a market crash, can be a wake-up call. You know, have you lost money on a bad trade? You know, use that then to reassess what you're doing. You know, shake the bad habit that's there. Maybe you stop following hype-driven X accounts and join a research-focused community instead. Surround yourself with positive influences to reinforce those good habits that you're building. And we've heard it time and time again, your net worth directly corresponds to your network. If you're hanging around with folks that are have a bad mindset and are negative and have poor financial IQ, that is what you're going to grow into as well. So there's so many opportunities out here on YouTube and different environments to grow your financial mindset and create a new hypnotic rhythm for ourselves. And lastly, we're going to pull it all together, how to build a great crypto, build these great crypto habits. Here are just some things to do. Write down your purpose, grab a notebook or your phone. We have phones on us now. It makes it so easy, and answer the question, why are you invested in what you're invested in within crypto? And be specific about what your goal and your purpose is. As an example, I want to grow $10,000 into $50,000 in 3 years by holding XRP or XDC or whatever your favorite coin is. I'm not a maxi in anything. I'm here from a strategic perspective to create generational wealth. Secondly, build a strategy. As we've been talking about in the content that I've been delivering over the course of the last few weeks, create a plan that matches your goal. I cannot give you a direct plan. I'm not a financial planner. Nothing I say is financial advice. I'm just sharing my thoughts out here to help everyone along and bring as many folks along as possible through this journey. But for long-term holding, research the top coins and set a dollar cost averaging amount. For trading, learn technical analysis if you're a trader and set clear entry exit rules. I choose not to trade. I choose to buy and to hold. That's my thesis. That may not work for you, and that's awesome, but you got to have a strategy and you got to stick with that strategy. Form good habits. As we discussed, use hypnotic rhythm to your advantage. Schedule 30 minutes a week to do research. Set alerts for major news. Not every price tick that happens. And again, join communities, listen to good content for solid insights, not hype that elevates your emotional response temporarily until nothing happens. We have all these ups and downs emotionally when we're bought into hype. Now, keep in mind, when I state hype, I don't mean excitement about a project because it's well supported and demonstrates utility and growth, and I see what the future is going to bring, and I'm optimistic about it. That's not the hype I'm talking about. I'm talking about content that tells you you're going to be rich tomorrow. That's really not reality, not that I've found. And if you do become rich tomorrow, as we've been discussing, and you're not prepared for that wealth, you will have sudden wealth income. So it's about learning and building your financial muscle memory and understanding money. Breaking bad habits. This is a really hard one to do, right? We all have horrible habits that maybe we've learned and have done across life. Limit checking your portfolio to once a day if you're always checking it. If you're tempted by FOMO, just take a breath, put the phone down, whatever you got to do, turn the TV off, and check if the coin absolutely fits your purpose. And do you understand what you're invested in? Use market dips as chances to learn, not to panic. That's what it's about. It's knowledge, ladies and gentlemen. And lastly, let's just stay educated. Crypto changes fast, really fast. We need to read up on the blockchain tech, again, studying the white papers, follow trusted sources, do your own research, and just keep learning to stay ahead of the curve. Learn about financial principles and how money really works. And that's what I'm trying to bring you some of that content here as much as possible to change your mindset if you're not already locked in to that kind of mindset. In 2025, crypto is crazier than ever. I mean, we have so much going on this year. We have the new regulations. We got AI driven trading going on. We have wild market swings. A definite of purpose keeps you focused on your goals, whether it's wealth, innovation, or if you're trading for profits. And the hypnotic rhythm helps you build habits to stay disciplined and avoid traps like FOMO or panic selling. But that's going to do it for today. I really hope you found value in this technical discussion in the beginning, talking about the bond market and what is going on there, because that is absolutely a red flag that we should be paying attention to. And we're going to have a lot of capital coming into these markets, and we want to be prepared. And I also hope you enjoyed the content on the concepts that we talked about here to how you can level up your crypto game. And if you enjoyed it, just please hit that like button for me, because it just helps out the algorithm. And hopefully you subscribe to the channel, hit that notification bell. So, excuse me, as I have more tips and just content coming out, and we can build this community that thrives in 2025 and beyond. Drop me a comment and just remain very safe out there. Stay away from the scammers. And until next time, Zip is out.